Morning all, how are we all doing? How's everybody? Can't get into my website this morning, something wrong with the admin area, so couldn't put a post out on Facebook, so it might be a bit light on the ground today. 1 second, let me just over here. Right, how's everybody doing? Morning in, later on, Sarah, Danny, Yotko, JC, Julian, Andrew, Amy, Burke, how are you doing? Martin, Kenley, Gregors. This list is getting too long. Mark, Neo, David, how is everybody? All good? Wednesday morning, halfway through the week. Just so you know, I'm not here tomorrow afternoon because it's bank holiday in the US. I completely forgot about that. US is shut, so there's no afternoon session tomorrow, and I'm not here on Friday because I've got the day off on Friday. So this is the last. No, it's not the last morning session, but I will do tomorrow morning because the DAX will be open tomorrow morning. So we'll trade tomorrow morning. Might be a bit quiet, but we'll try it. So I won't be here tomorrow afternoon. So just to let you know, morning, Magnus. So yeah, I've completely forgot about that bank holiday. I missed that. So no US session tomorrow, and obviously I'm not here on Friday. While we're talking about the news, we have got Bullock speaking this morning, a little bit late, 8:35. So there might be a little bit of Australian movement this morning. We've got the Euro Stability Review, and then we've got the Autumn Statement today, which may or may not move the pound. It's very difficult to tell with the Autumn Statement because it's more about tax and spending than the actual economics, which affect interest rates, inflation, all that sort of stuff. So may or may not move. We'll have to wait and see. So we've got potential movement this morning from 3 different currencies, but not sure. Unemployment claims at 1:30. That will probably move the US. Then we've got Michigan at 3 and Macklem speaking later for the CAD. So there is a fair bit of news today. It's sprinkled throughout the day. It's not massive impact, but could be a fairly whippy day today. We'll see. Overnight news, FOMC last night. So the US dollar, if you look at let's look at Euro US, it's the easiest gauge. So you can see obviously Euro US dollar came down last night. So strength in the US basically. Things like the US dollar Swiss, we had a little bit of a spike up, but not really gone anywhere as such. US dollar yen had a bit of a rally. That was an ADR yesterday. So it was fairly bullish what they said yesterday for the US, because basically the upshot was there could be further tightening on the cards, i.e. higher interest rates. And they need to see more evidence that inflation is actually coming down at the rate they want it to, because they're not convinced it is. So there wasn't a lot of movement in long-term interest rates changing, etc., but it was very much, this might not be the end of it. Same as the pound. Bailey's come out and said, yeah, it's going okay, but it's not there yet. So we are still looking at a rate cut in May, definitely June next year. So that is bearish US, but they're sort of hinting that there is a possibility, if the figures aren't right, we could have another rate hike, but I don't think it'll happen. So that was basically the news. Wasn't bullish, wasn't bearish, but a little bit more bullish than we were expecting, I think. Other news overnight, not an awful lot. We've had some... we've got NVIDIA's earnings, so that will potentially affect the NASDAQ today. Apart from that, not an awful lot else. Stuff going on in the Middle East with the war. Japan have also come out overnight and said that they will potentially end, well, no, they haven't said that, but the economists have said that Japan will potentially end negative interest rates next year. 85% of economists said in a poll. So that's bullish yen. Very, very bullish yen. So we've obviously had a good run on the yen over the last few days. So I suspect the bias might shift a little bit more bullish from on the Japanese perspective. Adding to that, you should be shorting everything against the yen. Stance. Kim Jong-un, we need to operate more spy satellites for self-defense. Okay. Morning, Leshy. Right, so there's your news. Nothing particularly exciting. I've got some profit to take on New Zealand dollar CAD. I'm not sure about taking profit here. I'm going to wait a little bit this morning. I might regret that, but I've got a fair bit of profit to take today. I didn't bank anything yesterday. Everything was just playing out, so not a lot of drawdown. Everything's just kind of ticking along. Right, let's look at the DAX. We've got 1 minute to the open. We've got a gap down situation today on the DAX. So we have got a gap to fill. We're right up at yesterday's high as well. So upside on the DAX today. We're still bouncing off. Whoops, wrong one. We're still bouncing off this high up here. Market can't get through. There's only one way to go when you can't get up. Down. So there is that gap fill to the downside. Upside today, you can see where we've traded up to today, which is just shy of yesterday's high, previous day's high, last week's high. It's all high there. So that is a massive resistance. If we can get through that, we've got a big run, but we can't. So it looks much more short today than long, but downside, we've got a gap fill there. There you go, market's open. So, yeah, we need to watch this area carefully for resistance today. Once we get down through that gap, if we get down through that gap, we're looking at yesterday's low and previous day's low, miles within ADR. So there's really good downside targets. Close to breaking long there. So yeah, tricky one today. Really big. There you go. I'm long on the DAX. Really big resistance here. Buying into resistance, never a good idea. Slammed straight through it. Buyers having a real go this morning. So if we break that high, next level is there, which is 160.46. So that's 2 hours nicely within that. So 3R basically, that is the next upside resistance. Got through that pretty convincingly this morning, didn't we? So looks like a potentially good run. Sorry, that's not 160.46. 160.46 up there. What's that? That's an old monthly level, isn't it? Yeah, that's that old monthly high. So 5R easy today. The next resistance, and that is also within ADR. So that's a really easy upside target today. Let's see if we can hold this move. Good move. They are not hanging about, straight through that resistance. So we need to watch this 5-minute candle, because if this wick, if this candle turns into that, it means that they are selling this level still. They just run through it and the limit order's triggered higher. So we'll see what happens, but that's a big move through. Looks like the bulls are fully in control today. Nice to get a target straight away, wouldn't it? Morning, Outro. Morning, James. Morning, Michael. Morning, Evans. Not sure if we'll get a trade on this morning. Yeah, I did. 152 on a 151. Only by a pip. That was quite lucky, wasn't it? Mind you, if it wasn't that, it would have been that or that. Me, anyway. 1, 2, 3, 4, 5, 6. Yeah, so I'm using 6 candles pre. Half an hour pre-market. My minimum range today is 163. Mine's 151. There we go. You got different broker data to me. Ooh. Here come the sellers. That's the candle I did not want to see. Why is that stop loss there? It's done it again. Did that yesterday. Remove that stop loss. Or rather, couldn't get through to it. Amy also not in. Morning, Ismet. Well, I think you might actually be happy you're not in, because that is a total rejection and that's going to hedge. There's no way that's going long. Moment, they are selling that high. Proper selling that high. That ain't going up. That's a hedge today. So downside target's going to be down there. Yesterday's high. So we've got two targets to the downside. Yesterday's low is 2.5R. Yesterday's low is previous day's low is 5R. That's annoying. Oh well. We'll see where we go, but that looks like a hedge to me. They are selling the highs with force today. But there was a hell of a lot of sellers. We got through that pretty convincingly, didn't we? So, but there's someone doesn't want to let that through. And we got the gap fill to play as well to the downside. So that's a hell of a whipsaw. You're not going to get a trade on. If you didn't get the pre-market, you're not going to get that, are you? 330? No, it's too big. So won't be a trade on the DAX today if you didn't get on the pre-market, I doubt. Look at that. Total rejection. I'd be very surprised if that manages to get up there. So to break out of that level, it's got to go some, isn't it? Big move. We'll see. We'll come back to that in a minute. But your 5-minute opening range is 330. It's 33 points, which is over 20% of ADR. So if you are going to take that break, bear in mind your downside target initially is there, and then and this is the reason why you need to pay attention to the size of the range. So that is your 5-minute opening range. So that low, yesterday's low, isn't even 1.5R. Yeah. So this is why we use minimum maximum ranges. If you want to get a 1.5R, which is the very minimum you should really be looking at from a profit perspective on that range size, you've got to go beyond yesterday's low to get to it. Yeah. This is why, because the market will find it very hard to break out and get a run when it's put in 20% of its usual range within a 5-minute candle at the opening cash balance. It's just going to run out of steam. Just a shame we didn't get to 2R, but we'll see what happens. It's a new candle. There is a 50-50 shot of it going up and down. However, I would imagine we'll probably have inside bars for the next half an hour. Hell of a wick. Minimum range is 163. Mine. Different broker. US indices are running at the moment. So they may get a helping hand from the US. So NASDAQ, obviously, what were the earnings on NVIDIA? Did it actually publish the earnings? Triples, blimey. Okay, so NVIDIA revenue has tripled, not necessarily profits. Products to China are now subject to license agreements, contribute 20-25% data center review. They are anticipating a decline in fourth quarter sales. So EPS is 336 on a 402. Yeah, I mean, that is fairly positive for NVIDIA. So although they're going to have a quarterly sales, they've tripled their sales over the last quarter. So as we're getting a run potentially on NVIDIA this morning and the tech sector in general, that may well help the NASDAQ stocks rise as well. But we'll see. S&P's having a go. So is the Dow. We'll see. It ain't over yet. Right, let's have a look at the FX market. So, so far today, there's no ADRs. You've got some shares in the video. Good one. Were the back test results good if you target 1R as your first target? I don't know, Outro. Test it. Tell me. I don't think I tested 1R. I wouldn't test 1R because it's not going to work, is it? You'd have to have a 50% strike rate for that to be profitable. Well, it wouldn't be profitable. If you had a 50% strike rate and a 1R, it wouldn't be profitable, would it? I mean, there's no point. There's absolutely no point in taking a trade if you're going to get a negative risk reward on it. Because you unless you've got a strike rate like 80%, but nothing's got a strike rate 80%. That ain't going to work. I don't know. Test it. I haven't tested it. You test it. You tell me. So yeah, no ADRs today. Oil yesterday had a little bit of a sideways day. I was just looking at the oil ADR today. It's very small. So nothing to look at on the ADR side today. The weeklies, obviously, we looked at these yesterday. They have started to play out. So if you did take the ADRs yesterday, which all hit their weeklies, which was yesterday morning, they played out beautifully for you yesterday. So lovely pullback starting. So at the moment, we're kind of a 38 retracement going in on the CAD yen. There's your 38 retracement. So that's a shallow pullback, medium, deep. So lots of propulsion targets to the upside. So as I said yesterday, these moves on the yen, the market's got to breathe. So the pullbacks all actually kicked in yesterday. Lovely ADR reversal, lovely W pattern reversal alert. Textbook stuff yesterday. US dollar yen. We looked at this yesterday and I said this is probably the setup of the century. I'm not going to take it myself. Whoops. And look at it. Beautiful. So when I called it yesterday, we were down here off of this hammer. The 5-minute reversal alert we looked at yesterday was this one here. That was the entry candle. You're 140 pips to the good over an ADR in 24 hours. Very nice move. So they've all started to play out. And that was obviously that confluence we looked at. It was 2 monthlies, support resistance. It was the intervention low, and it was the hourly RSI extension, and it was ADR. It was just literally 5 ticks. If you wanted to go to court and you needed to build a case, there it was yesterday. Perfect. So textbook setup. I just didn't take it because I've decided to leave the yen alone for a bit. I'm much more interested still in shorting it though. So looking for the pullback entry short. So waiting for an RSI extension, ideally upside. So that one was beautiful. The CAD was beautiful. The Swiss, again, same thing. We came off of a monthly level. So this was an old monthly level, not a very good one, but it bounced nicely off of it. This was this accumulation. So that was all good. What else did we have yesterday? We had Euro Yen. Again, same thing, weakness in the yen. And New Zealand dollar CAD. So New Zealand dollar CAD was a hit to the upside. That one's the one that's in profit for me at the moment. Although this is a strong upside rally, there's potential that this is just a flag break long and this is going to be the pullback. I've got it in profit and I can take 0.5% off of it. I'm not sure if I actually want to, because I think this has got further to go. I think we're going to come back and at least retest this level. So I've got my target basically in that propulsion gap. So I'm looking for that to be the test. So we got this level here, which was a previous resistance turn support. So that is where I think we'll probably get to with decent amount of certainty. I think if this US dollar powers up after what they said on FOMC yesterday, we've got a chance basically of getting that propulsion gap touched as well. So I'm going to hold it. I might regret this because we have got a support here, which resistance, which bounced basically. So I'm just watching this morning, hoping that we get a little bit more of a continuation on this drop. This was my initial target. So we actually hit it. And at the moment, we are just sitting at that level. If we break this low, we should be able to get down to here or here. That area, which is the propulsion gap. So then my target is there, which will be a nice profit. That'll be about 1.25%. So I'm going to look to hold that down to there. That was it. So that was all the weeklies. So there's no ADRs so far today. There's nothing on the RSI dash. So we looked at the RSI dash for the last few days. We've had the odd hourly, which has popped up. I got into Euro Pound yesterday. We'll look at that in a sec. We'll look at the portfolio in a second. There was loads of RSIs lit up here yesterday. Most of them were New Zealand dollar. Most of them were yen. Yeah, they all played out yesterday. So as you can see, yeah, all of these have mean reverted over the last sort of 24 hours. So the only thing we've got left extended at the moment is the pound US dollar. That's on the 4 hour. That's come off the monthly. So this is the previous, that's the 3-week monthly low, which acted as support again. We broke it, used it as resistance, broke, and now they are selling off that level again. So we're looking for a kind of pullback into there, potentially leg up into these highs, or we're looking for a pullback back into propulsion. Obviously, this is the US dollar, the CPI move. So tomorrow's bank holiday, it's very, very, very tricky. If you go and look at previous bank holidays in the US and Japan, you get a very mixed reaction. Sometimes it's like this, like it was yesterday. Sometimes it just does this, and it's just Christmas trees, whipsaw all day, nothing happens. Other times you get ridiculous 150, 200 ADR moves because the market gets manipulated and there's no one there to defend it. So it's always very hit and miss. So just be aware tomorrow you could have it going either way. We could have a mental day because it's a yen and US bank holiday. Or it could be completely dead and sideways. We'll probably find out when the DAX kicks off tomorrow morning, because if there's some volume coming through the DAX, we'll probably get volume coming through the European market as well. So we'll see. But this one obviously is not going anywhere so far today, but that's your only extension, 4 hour, and it's only just extended. So that would be what I'd be looking for, pull back into propulsion. If you're going to short that one, that's it. Nothing else to look at there. DAX has a couple of little bullish candles. As I say, it's done it. It's shot this morning. Going to find it very difficult to get any momentum out of this now, which is a shame. Should have taken that 1.5 hour, but 3 minutes into the open, this was looking like they were not giving up, wasn't it? Certainly did. So yeah. DAX has been very hard this week, very hard. We've had very, as you can see, look, very difficult sessions on the DAX this week. So that was the open there of the DAX on Monday. That was the open yesterday. Not going anywhere, is it? Stuck. Swings and roundabouts. Morning pot goiter, pound US dollar. Just looked at that one as if by magic. It's the only thing we got extended today, 4 hour. Everything's playing out. Morning day trader, morning Franco. Probably a good job we didn't get in then. Yeah, today on the DAX. You kind of needed to take that. You know, this is the thing. Like you just said, Outro, in hindsight, 1 hour would have been the target to take today, wouldn't it? Yeah, if you go and back test that, you might find it's profitable. But then when you take 1 hour tomorrow, because that's what you've decided to do, it will go to 3 hour. If you set the target then at 3 hour, it will go to 2 hour, and you'll go, oh, we shall use 2 hour. Every single day, that break is going to be different. Every single day, where it's going to get to is going to be different. Every single back test you do is never going to be repeated. Yeah. Got to watch price action. There is no set and forget. Hey, Michael. What? Are you talking to someone else, Franco? Right, DAX is attempting to break short and go for the gap. I got a feeling today we might do something like that. Mate of yours. All right, okay. Right, so we'll see where that goes. We'll have a quick look at the portfolio at the moment and see where we are. So at the moment, Aussie dollar CAD have 4 on. That's coming down into break even now. Looking at the hourly. So initial entry on that one was there after the CPI move on the US up to the RSI extension. We literally got a pullback and retest of that level. Again, hindsight, easy, isn't it? Should have got out there, didn't. Went sideways 3 days. Then we had more news, which obviously rallied us. So we're pulling back now. So target for me is that high, that double top, which is that propulsion gap. So that accumulation break there that started that move on Monday. That's what I'm looking for them to come back and retest, and that's where I'm going to get out. Obviously, this could come back much further and come and retest that level. We don't know, but I'm just going to go for that propulsion gap because it's a nice, easy target. I've got quite a lot of exposure on the Canadian dollar and the US dollar at the moment, so I'm not looking to get greedy, just looking to get some profit out of it. Aussie dollar, US dollar. So that's nicely extended at the moment, was rather nicely extended yesterday. We got a lovely M pattern reversal yesterday up there. There's your reversal alert. We've come up, we've retested it. So new leg down. We are coming into multiple resistance levels, previous resistance. Obviously, that propulsion gap is what's holding at the moment. But we got this area here. It's basically multiple highs. So any of that level there, which is this propulsion gap, could act as support. That's too tight for me to get out because that's just break even. So I'm looking for a little bit more movement on this one. Basically, I'm looking for it to come and retest this level here. So I'm trying to get out sort of on a retest of this propulsion gap. But the reason I've chosen that level is because of these lows. So this area here. Touched that multiple times and we've bought from it. So I'm expecting there to be support there because that's where they bought from multiple times before. So that's where my target is. No real logical reason apart from that. Obviously, there's multiple propulsion gaps it can target as well. So only got 2 on that one. CAD Swiss, which is my biggest problem at the moment. That reversal alert yesterday was so close. Literally to the pit of the wick before the low. So this is exactly why the indicator works in the way the indicator works. And this is a good example. We bought here for that hour. They got run over by the sellers. Yeah. So this was the last batch of banks that tried to go long. Yeah. We need them to succeed to be confirmed that we have got buyers on side. That is what this support rectangle shows you. It shows you where the last attempt was. So if that breaks, we know that these guys are now back in control because these guys made a new low. So what we want is that wick there to be broken. Again, the guys that did that stepped in and said no at that level. This is why, and they did it there. They did it there. Yeah. And that was previously where the guys were buying from. So we know that this is ADR and Euro Yen. So we know that this is a strong battleground, which is why the indicator works in the way that it does. Yeah. Buyers wanted to take control of the market at this level. We gapped down. Sellers said no. Then the sellers took control of the market at this level. And they're still in control. Yeah. This is what the indicator shows you. Who's in control? Which is why everybody goes, oh, it gave me a reverse alert and then it went the wrong way. Yeah, it did, because people took control in the other direction. Simple as that. It's not a holy grail. It's just telling you what's happened. You can see it on the chart. If you can read price action in that way that I just read it there, you can see what's happening. But the indicator just makes it easy. So you can glance at it and go, oh, buyer's right. That's it. That's all it's doing. So we didn't manage to get through yesterday. So far this morning, it's looking like we've got a bull run on, which is good. I did trigger my aggressive drawdown control entry yesterday. So it did break high enough with that wick to get me in. So I'm hoping today we get a rally up into this propulsion here. It can test ADR, fantastic. If it can get above that level up to 125 ADR, that's where I'm taking off these two positions so that I can do some more drawdown control. So this one basically is obviously under drawdown control at the moment. So I'm using profits to reduce lot size. So the plan is that position and that position will be taken off when we get to this resistance. And I will use that profit to then scale back on some of these higher positions again. So again, just damage control, basically. This is what this one's in at the moment. Euro CAD. Nice drop yesterday. So big reversal out of RSI. That's all these ones that I was saying yesterday, these CAD and these US, we've got beautiful divergence. We had divergence all over the place, which is basically the market just sort of stalling out and going, we ain't got any more. So when the relative strength drops and price goes up, that means there's not as many people looking to buy. If it's going up, it just means the sellers just aren't there at the moment. So we're hunting for orders. Eventually, we won't be able to find any more. There's only other one way to go. Normally down. So we come into previous support, which is bounced at the moment. But again, I think we've got more downside on this. We've had a lovely run for over a week. We do a pullback, a decent pullback on this. So we've got oil starting to come to life a little bit now as well. We've had a nice big run on oil. That will help the Canadian dollar. Lagarde, where are we? Wednesday. We've got the stability review this morning. We had Lagarde speaking yesterday on the euro. Again, very much we might have to increase interest rates, but we'll see how it goes type thing. So there wasn't anything bullish or bearish in there. So no real strength or weakness in the euro. So this one can go either way. There's way more downside targets, as you can see. That one's pretty much full. Yen's moving again. We'll have a look at those in a sec. So yeah, I think we can get a 50% retracement on this leg, which is why I'm targeting down there. However, when we get into profit on this, I'll obviously assess the portfolio as a whole and see what I've got, and I may well close partials out, or I don't know. I'll see what I do, but I'll see where we are with everything when I get there. That's Euro CAD. DAX is still not moving. We're still sideways. Euro Pound was a new entry yesterday. Kind of sounds like top of the pops, doesn't it? And with a new entry, we've got Euro CAD, Euro Pound, sorry, with a long, which looked like it was working absolutely beautifully until the last hour. So this is RSI extension. I don't often trade the Euro Pound. As you can see, there's no trades on there. It's very rare that you get into the Euro Pound because it doesn't move fast enough. Just about possibly got an entry long there. Might have just about got an entry short there. That's it, pretty much. Yeah, just don't trade it, pot pickers. So yeah, so first entry on this for a while. As you can see, it just goes up and down and up and down and up and down all the time. Euro and pound, very, very close trade partners. So we are very tight in our movement. We want to keep prices nice and stable. ADR is 36. It hardly ever moves. So in it, hopefully it will go up and test that area there. In fact, I need to put my TP in. So targeting top propulsion gap because it's very very rangy, as you can see. So be looking to get out up there. If not, we've got potential support coming up there. We've got a lovely support coming up at 175 ADR. So if this pushes down, I shall scale in probably twice on the way down here, and then we'll probably get a bounce. I mean, it's just always rangy. It's going to take something pretty fundamental for the euro or the pound to really make this trend. So, you know, we're going to have to say we're putting our interest rates up at the same time as the euro says we're putting our interest rates down. Then we will get a massive divergence and a move and a trend. Otherwise, this goes sideways, as you can see. If you look at it on a higher time frame, yeah, this is what we do. We spend our life going sideways. A little bit of a movement, still going sideways. Yeah, so it will obviously go up and down, but it's not trending like the yens or anything. So first long on that one yesterday. Euro US have 3 on at the moment. So this is working out nicely. We had the reversal alert yesterday. Got a fair way to go on this one. So as I said yesterday as well, when I looked at the portfolio, or Monday, whenever it was, that propulsion gap has been retested to the pip. That's what I'm going to target as a double bottom. Yeah, so I'm not going to get too aggressive on this. That is a tiny profit, very, very tiny profit. I've got a lot of exposure on CAD and US. So I'm, again, when we get these into profit, like that New Zealand dollar CAD, I'm going to probably take some of that off in a minute. It's a case of just basically watching and monitoring the portfolio. If I've got that gone, and that gone, by the time we get there, I'll probably leave it on. So I'll adjust TPs down and go for a proper profit on it, because my exposure will be less. At the moment, because I've got high exposure, I'm using lower targets. And obviously that CPI, we've had no confirmation at all that there is any strength in the US dollar. Yesterday was the first down day we've had. Yeah. So as far as I'm concerned at the moment, we are weak US, which means that thing's going up. So I don't want to get too aggressive on my exits. New Zealand dollar CAD we've looked at. It's coming down nicely. So what I might... 0.75%. No. It's the only New Zealand exposure I've got. I'll let that run for a minute. I'm just going to keep an eye on this one this morning. As I say, the thing that I don't like about this is there are so many levels I can draw on this chart where I think price might get to and bounce from, one of them being exactly where we are now. Yeah, it's just there's so many areas there. There's five areas where we could find the market just flips and turns and starts a new leg up, which is what I'm worried about. This is a 50% retracement on that leg. At any point of those 5, we could find support. And I've got a nice profit, which I can take right now. What I don't want is that profit just to suddenly disappear in one big hourly candle to the upside, like that one. So, however, as it's still coming down, I'm going to leave it alone. But that one's moving nicely, in profit, ready to bank. And US dollar Swiss is rallying nicely as well. Got 3 on that one. Averages within ADR, no problems at all. Big propulsion gap target. So that is one massive propulsion move. That's your CPI. It was a 2-hour move on CPI, and then obviously we had a continuation. So should be able to get there with no problem at all and form a range. Or we're going to break that high. So again, I will evaluate the portfolio when we get to that high and see how that exposure is, see what that's like, see what that's like. Play it by ear. This is what you do. You just look at your account when things get to different levels and decide what to do. So there you go. That's the portfolio at the moment. DAX, we are back out the highs. So DAX is trying very hard for us this morning. So sellers try to retake control. We have got enough buyers in the market to break this morning. So very difficult to tell where we're going today. So we've got to pick that level, obviously. We've got this week, this 2-month high, and then obviously the high before that. Yeah, difficult choice today. That's ADR pretty much up there. So we could get a nice run on it. if it goes, but I'm not convinced yet. Till we break out of that high, we are literally inside bar, aren't we? So inside bar on the cash balance. So we haven't actually gone anywhere yet. The US indices aren't doing too bad this morning. NASDAQ is just coming up to retest pre-market highs. S&P also doing the same thing. The Dow has just attempted a pre-market high. Mind you, this is all pre-market high because it redraws the pre-market high, because this is still pre-market for the US, don't forget. But that was the previous pre-market high. So we have just tapped that, but obviously we're finding sellers at this level. This level here, look, where we sold from yesterday. We're still selling from this level. So until they break that level, this is short, isn't it, still? So we'll see. A lot of resistance to go higher, though, as you can see. Yeah, there are orders sitting here not really wanting us to progress. So we need to run them over. Evans, can you briefly explain tape reading using volume when trading the indices? Not without a tape. I haven't got a futures platform at the moment with any data coming into it. I can't really know. All of, I mean, basically volume profile is what you're talking about, I assume. So if you've got software like Jigsaw, I haven't got a futures feed at the moment with the CME. So all a volume profile is something like that. And these are just volume nodes where what these will do, if you look at these areas on a candlestick chart, these, I'll tell you what I'll do. I will draw you the volume profile that you can see on the screen. Yeah. So at the moment, the volume profile for you can't really, there's not a volume profile for today. It'd be rubbish. The volume profile for today will be that. That's today's volume profile. Very little volume up there, very little volume down here. 90% of the transactions have been done in this area. So all the volume so far is here. So this is now forming a support resistance area. So when we push up higher, that little node will be intact. So when we come back to it, we know there was volume there that drove the market higher, i.e. buyers. So when we come back there, those buyers that drove higher will probably buy it again, because that's what they did last time. So when you're reading volume profile, all you see on the chart are things like that, which are just volume nodes, which is high volume areas. And whichever way you went from them is likely where you will go from them again, unless there is a change of balance in buyers and sellers at that level again. So this volume profile you can see here yesterday would look something like that. That's a really bad drawing, but basically you've got a high volume node here. You've got a high volume node here. Yeah, so those lows, there was a lot of volume going through there because we bounced out of it multiple times. So there's a lot of orders there, there, there. We broke down, load of orders there, 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 there. Yeah, and then down here, there's a load of orders. Yeah, there, 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 there. So literally all a volume profile is support and resistance. This is why I say in that video, every course you do, if you go and do a course now on how to read the tape, how to read volume profile, how to read footprint charts, yeah, they are all teaching you exactly the same thing in a different way and getting you to part with your hard-earned cash to learn the same thing over and over again. The market moves from support and resistance to support and resistance. Call it supply and demand. If you want to make a line into a block, yeah, and call it supply and demand instead of support and resistance, fine. What is it? It's a level on the chart that price sold from. What's the volume profile? The highest areas of volume we got stuck at and caused accumulations at before we broke support. Yeah. What's the propulsion gap? That's a really bad one. Yeah. What's the propulsion gap? So put those two together. An area of high volume accumulation before a party took control. What's that? Support. All the same stuff. Market just moves from areas it traded at before to areas again. And as long as the people that took control of the market at that point are still in control of the market will move away from it again. Unless you have somebody coming up to that with more money than these guys have got, it won't break through. Volume profile, reading the tape, footprint charts, everything. It's all the same stuff. This area here, you're going to find it will buy out of it because there's buyers here. I can see there's buyers here because price went sideways for ages and then it went up. That means there's buyers there. Those buyers are still there. It's just going to go back up again. Yeah. How much money have these guys running down here got? Don't know. If it's more than these guys, it will go down. It's that simple. It's a binary market. There's a buyer, there's a seller. That's it. It's everything you see, everything you learn is an overcomplicated way of saying, will it get through that level? So it's the same stuff. Reading the ladder, basically, is just basically looking at a price point and a price point. And every time we move from that price point up to that price point, the volume profile gets one tick bigger or one order larger. The more we flick around between those two price points, the bigger that line becomes, and that volume profile builds like that. So there will be a massive volume profile bulge on the tape there, because there was a large volume there and a large volume there. The large volume there was one big order that pushed the market away. The large volume there was multiple big orders that pushed the market away. The large volume there was multiple orders that all traded at the same price and didn't go anywhere. All forms support. Happened there as well. That's it behind my head. DAX is stuck again. US markets are selling off, which obviously isn't helping this today. Well, at the moment. Hopefully that answers the question. Can you show, is that ADR and Hedge VPS trades again? Can you show, is that ADR and Hedge VPS trades again? Oh, and the VPS. Yeah. Index is looking bullish again. They were a minute ago. Well, 10 minutes ago. With some of the trending currencies, do you look for change to trade in the direction of the trend? I don't personally know. I'm a mean reversion trader, so I don't trade with the trend. But you can do. You can mean revert in a trend. There's a video on the website about that. It's actually about mean reversion in trend trading. So this video here, mean reversion versus trend trading, which should you be doing? Link in the chat. But yeah, you can trend trade. The trend trading strategy on basically a trend. If you want to stay in line with the trend, this trend pullback strategy using the 24 and 72 moving averages on the daily is absolutely perfect. That's what you want. So in a trend, yeah, you've got lots of pullbacks. As a mean reversion trader, I don't care which of those I take. If I take the leg down, brilliant, because RSI got extended to the upside. If RSI gets extended to the downside on a down leg and I take the pullback, I don't care. This is why you should be a mean reversion trader, because if something's going sideways, you can trade mean reversion. If something's in a trend, you can trade mean reversion. If you are a breakout trader, you can only trade ranges because you have to trade the breakout of the range. So you have to have a range before you can take a trade. if you're a trends trader, you have to have a trend established before you can get into the trend, because otherwise there's no trend for you to jump on board. Yeah. If you are a range trader, you can only trade when the market is ranging. A mean reversion trader can trade when the market is trending, ranging, ready to break out. Doesn't matter. We don't care. We get in the market and we wait. That's why you should be a mean reversion trader and not try and specialize in a trend and this is why, again, I say with the stock index hedge EA, the opening range breakout strategy, everyone's saying, well, why don't you filter it? Because I don't know which way it's going. If I knew which way it's going, using a filter, I would trade in that direction. When it goes down, I just wouldn't make money, would I? You don't know where it's going. The problem with trend trading, which you will find, is you get in when something is started to trend, which is great. Then you get out at some point. Where do you get out in the trend? There, 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 there. It's very hard to pick a target in a trend. When it's starting to come back, usually, and it passes above a moving average, that's when trend traders get out. So what they do is they lose 50% of their profit because they wait for a pullback to get out. Unfortunately, when they get out, that's usually when the market starts the next leg of the trend. What they should be doing is adding more position size. It's very difficult to do that because the first time as a trend trader, when you go short, make a load of money there and add to the position there, and it pushes down, you go, fantastic, I found my niche. The next time it pulls back and you add more position size, the trend changes direction. And what you end up doing is losing all of that and only making that. So your loss is actually here, wiping out some of your profit, and you don't make a lot of money. And it's taken you months to get that, or weeks, or it depends on what time frame you're trading. So the problem with trend trading is trends come to an end. By the time you've identified there's a trend, the trend is usually ready to end. So you jump on board, and this is why trend traders find it very difficult to get into trend trading, because by the time you've identified a trend, you've missed it. Breakout trading is easy because you can easily identify a range and you're ready to go. That's really easy because you have to wait for the range to form before you can do the breakout. With the trend, you have to wait for the trend to form before you can get into it. The problem with trend trading is it will end. With breakout trading, it will either work or it will fail. If it doesn't work, you've still got that setup. The breakout is better than trend, but mean reversion is better than everything. That makes sense. ADRs. So the ADR reversal set file, this is it. So ADR reversals set file with the EA is in 0.6% drawdown, has done 9.6% this month so far. Hedging set file has done 39% this month so far and is in 12.2% of drawdown. Who asked for that? Johannes. Okay. Yeah. All going very well. All doing good. The H4, for some reason, it's blank. I don't know why. Oh, there we go. That's... It's when it's maximized. It won't work when it's maximized. There's something wrong with the window. Look, it's just not. So H4 mean reversion has done 12% this month and is in flat, basically. So all set files killing it this month. DAX. Well, we've made a new higher low. So we're bullish. Not that bullish. If not, have you found it doesn't work? Or what's the drawback? I think I just explained that, haven't I, Mark? Yeah. Basically, as you know, as I keep saying, there is no way of predicting price movement in the future. You can't predict the future. You can only see the past, which is why in the course I say look left. Yeah, the only thing you can do is look left. Yeah, that you have one thing that can give you a clue as to what might happen next, and that's what's happened in the past. So when you see a level like that and price is approaching it, it may well react there. It may not. Yeah, you have no idea what's going to happen at that level, because it depends on the balance of buyers and sellers when we get there. The balance of buyers and sellers when we got there was sell heavy. Yeah. So we sold into that level, the buyers won. We sold into that level, the buyers won. We sold into that level, the buyers won. We sold into that level, the buyers won, the sellers won. The buyers tried again, the sellers won. We tried to get back there, the sellers won. We tried to get back there, the sellers won. We tried to get back here. What's going to happen here has got nothing to do with these past instances, because these are past. The balance of banks' buy and sell orders at that level, that price point, shifts every time you get to that price point. There will be sellers there because they drove price down, and if they're still in the market and it's pushed back against them, they will try to stay in the market. It's much easier to stay in a trade than get out of a trade and find a new entry. They will try to stay in. If they can't, they will flip and reverse the opposite direction, which means you fly through support and resistance. They're the only two things that happen at those levels. It flies through it or it bounces. It's a 50-50 outcome. So you have to pay attention to support and resistance. You have to pay attention to market structure, who's in control now. And if these guys are going to remain in control, when the market pulls back, they will add more size to their position to drive the market higher, which is why we get market structure. That's all that happens. It's so simple. Yeah, every course you will see will overcomplicate it to make their product or service or whatever they offer better than everybody else's. There is nothing better, because nothing can tell you which way that is going now. It's going to break this level or it's not. I have no clue. It's trending up. Does that mean it's going up today? No. Everybody that's trend trading this is long. So what have they been doing for the last 3 days? Yeah. Nothing. Hasn't gone anywhere. Yeah. As a mean reversion trader, every time it hit that high, you shorted it. You've done really well. As a breakout trader, every time it popped its head above that level, you've stopped out. You've done really bad. As a trend trader, you're sitting here at the moment in profit, watching your P&L go sideways, doing nothing. You've wasted 3 days of your life. DAX is coming back down again, as you can see. What am I going to do in New Zealand dollar CAD? I'm just going to bank this. I'm done with New Zealand dollar CAD. I want to put some money in the bank. I didn't bank yesterday. I don't like not banking. There you go. So out of the New Zealand dollar CAD, 3 positions. Just over a week. Just reduces the exposure on the US side. Late again, xrupdate.news. What good, boys? What's good, boys? Nothing at the moment. Everything that you got into yesterday is playing out. The DAX is broken long and then gone nowhere. This support is holding where we bought from. They keep buying it. They're buying it again, but the sellers won't let it through this level. So we have a battleground drawn with today's range, basically. We're waiting. And we're building a volume profile that looks like that. Raw price action. Learnt this the hard way. 50-50 outcome at support resistance levels. Can you also please explain mean reversion? What All mean reversion is just reverting to the mean, which is an average price, basically. A pullback. The simplest way to explain it is a pullback. Yeah, when price pushes, it pulls back. Look at any chart. It's price action, market structure. Yeah. So the mean of that move is there. Yeah, the mean of that move is there. Roughly half. There is a calculation for it. Bollinger Bands have a center line, which is the mean. When you break out of a Bollinger Band, you return to the mean. The mean will move, though. The difference between the mean is dynamic. So but the only time it becomes annoyingly difficult to use is when you have a very, 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 very long move. It's like a volume weighted average price, like a VWAP in futures trading. But basically, it's just a pullback. So if you obviously haven't watched the Bootcamp raw price action, if you go and watch the Bootcamp on the website, there, that will explain how the market moves and elastic band theory, which is explained in day 2. Basically, when the market is extended, it will revert to the mean. And at that point, either the people that took control of the market there will remain in control and you will put in a new market structure leg up, or the people that made that move happen will lose control and you'll put in an A-shaped recovery, and then you will then move into a range, or you will start a short market structure. The whole market moves in structure because there is only 2 outcomes, long and short. When you go up, you can then either go down again beyond where you started, or you can remain into a range and trade in that level, or you can make new market structure higher than the previous high and do that. Each of these moves after a push is a reversion, a mean reversion, reverting back to the average. Which is why, as I say, regardless of whether the market is range bound or trending, we can, as mean reversion traders, take advantage of every single opportunity out there. If you have a market like we've had this year, where virtually nothing's been trending apart from the yens, the trend traders have all been sitting there watching this thing go like this, going, holy crap, when are we going to get a chance to trade? The breakout traders have all been going long, getting stopped out, going short, getting stopped out, going long, going short, and they've been ripped to pieces. Yeah. The mean reversion traders have been sitting there going, hey, short, hey, long, hey, short. They've been making a fortune. So when the market then breaks out of these horrible rangy conditions and starts to go into trend basis, the mean reversion traders are getting in on the moves and waiting for it to come down to exit. So we make money here, we make money here. Doesn't matter what the market does. The market goes up, the market goes down. Those are all mean reversions. When the market goes up, it's mean reverting the last short position. When the market goes up, it's also getting ready to mean revert that long position. Whichever state the market is in, whichever direction it's going, it's getting ready to set up to mean revert. Therefore, if you're a mean reversion trader, you are always about to get a setup. This New Zealand dollar CAD, I was sitting here there's my last exit, yeah? I've been sitting here all this time waiting for a mean reversion setup. There was one there that I missed. And I got it there. So I was waiting for the market to continue to push until it wanted to revert back to the mean of the move. In this case, there. Now that is either going to be a 38 retracement of that leg and a push, or it's a 50% retracement of that leg and a push, or it's an A-shaped recovery of that move there, or it's an A-shaped recovery of that move there, or it's a 61.8 retracement of that move there. I don't know what it's going to be. Nobody can predict what this is going to happen. I have no idea which of those. One of those scenarios I can guarantee with 100% certainty is going to play out. I can't tell you which one. I don't need to know. What I need to know is the market's going to do one of those. If I know it's going to do one of those, I know which direction it's going to go. I just don't know when it's going to go there. So if I get in there, and wait for it to do it, I'm going to make money. Position trading. That's what the banks do. Yeah. That's why you should be a mean reversion trader and not a trend trader or a breakout trader or a range trader. Range traders better than breakout traders and trend traders, but not as good as a mean reversion trader. All you need as a mean reversion trader is a measurement of strength, like the relative strength index, which is why I chose it, because obviously if you want a strength indicator, the relative strength indicator is probably the best one to use. You can use any oscillator though, but RSI tells me when there's been a strong move by one currency or the other. After a strong move comes a mean reversion. So all this is doing is telling me we're set up, ready to go short. When's it going to happen? No idea. Don't need to know when it's going to happen. I need to know it's going to happen. That's it. And I want to get on board when the people that are going in my direction have shown me their hand, i.e. we've had a reversal alert. And this is what the reverse alerts indicator is telling me. We are looking for mean reversion. We're looking for a short. The market has gone short because the last guys that tried to sell that lost have now managed to gain control. If those guys continue to remain in control, we will get a pullback and a retest form market structure. That's basically position trading in a nutshell. Wait for a big move, get ready to go short, wait for the people that are on your side to go short, get in with them and hope that's the move that makes the money. If it's not, wait for the next one. If it's not, wait for the next one. Yeah, markets look bullish again. Come on, you can do it, Dax. This looks like a proper buy, though. This looks like it, doesn't it, today? Support's held. We've broken new high. Again, market structure. Low, high, higher low. We're looking for a higher high. Rajiv, morning. Just got back from the school run. Good man. Looks like pivot points. Pivot points are just support and resistance, but they're mathematically calculated support and resistance. The reason I don't like pivots, apart from the fact I tried to trade them for about 6 months and failed, is that they are not price driven they're not institutional levels. So they're mathematical calculations based on previous price movement. In exactly the same way as fibs are. So they're kind of extensions, kind of fib extensions, if you like, but they're calculated. The problem with pivot points is there's multiple ways to calculate them. Which one's right? Yeah. One day I can't remember the name of the pivots, but there's loads of different pivots. There's one begins with a C. There's lots of them. But one pivot will be there. The next one will say it's there. Another one will say it's there. And whichever one you use, one of them will probably work just by pure luck that price will do that. Yeah. That level here is not a coincidence. Yeah. That level there is banks and institutions not buying anymore. Still not buying, 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 buying. Yeah. This is not a pivot level. This is an area of institutional selling confirmed multiple times. This level here, where I got out yesterday, is an area that previously they bought from. So I bought there because I knew they would probably buy there. Pivot points are mathematical extensions based on what this did yesterday being forecast into the future where it could go. Very much like average daily range, which is exactly what my indicator is based on, isn't it? The past. Over the last 10 days, on average, price has moved that far. Yeah. Historically, the chances of it getting beyond that level is 12%. What's it going to do today? Don't know. It could be 300. I haven't got a clue. But historically, this is what happens. Pivot points are working off of yesterday's price action. Yesterday's price action is one picture of a move over multiple days and weeks. So pivots sometimes work if the market is going to be in a similar state to what it was yesterday. When a news event happens, it's not in the same state as yesterday. Therefore, pivot points just get blown through. So which pivot point do you use? R1, R2, R3. There's multiple pivots, isn't there, above price. So what's it doing? Trying to guess at random where upside might be. I could do that. There. Am I better than a pivot point or worse than a pivot point? I just picked a random price. So did it. Doesn't work, does it? But you'll buy a course on pivot points and you'll think they're the best thing since sliced bread until 3 weeks or 4 weeks into it when you suddenly go, these things don't work. They look really good on paper because the guy was showing me the perfect example historically where a pivot point bounced to the pip. Doesn't happen in real life, does it? Can you use a fib? Yeah. You see me use a fib regularly, don't you? We're at the highs. Woohoo! New high of the day on the DAX. Yeah, so you see me use fibs all the time. Fib retracements are brilliant. But as with everything, which one? Yeah, this is not a good example to use it on, but so this leg here, it's a 50% retracement. I can see it though, because I've measured fibs for such a long time. I can see what it is. It's a 50. That's a 61.8. Sorry, I was looking at that move there. That's a 50. Oh, I've broken the line. That's a 50. Yeah. So where was it going to bounce? And this is the problem with fib. It's not a problem with fib. It's a problem with stops. And this is why I keep saying, this is why I keep going on about the bootcamp using stop losses is the fatal mistake everybody's making. Because if you trade fibs, fibs work all the time. I am called the market structure trader for one reason. I believe market structure is all you need to know to make money out of the market. Because that's what it does. I can show you it on the charts and no one can disprove me because they can see it too. It is there. It's like the sky. It's up there. Yeah. Earth down there. We can see it. Yeah. You can see market structure. Look, there it is. There's a reversal in market structure. It's there. You can't deny it's there, right? With fib trading, you can't deny that there are fib pullbacks. I use them all the time because as a market structure trader, I want to know roughly where we're going to pull back to. The problem is I have no idea where it will be. I can say with certainty it's more likely to be here because that's where the previous price action happened with the banks. But I can't tell you which level it's going to be. It could well push down to 71.9. It could push to 61.8. It could have gone there, could have gone there, could have gone there. The problem with Fibonacci traders is they will take a 38 bounce. If it doesn't give them a 38 bounce, they won't take a trade. They might then go, I'll take a 50 bounce, which they would have done there because it bounced perfectly off the 50, look. And then it stopped them out. What they should have done is put their stop at 61.8 and then they'd still be in that trade, but just in drawdown. But what happens if it hits 71.9? They get stopped out and they go, oh crap, that trade didn't work. What does it do then? It bounces from 81.6 and flies. Everybody's trying to be so accurate with everything. You can't be accurate with something that's totally random, driven by 10 institutional banks who all disagree with each other. Not possible. Forget it. It's going to pull back. Why did I just get out the New Zealand dollar CAD? For the very same reason, I have no idea where this thing's going. But what I do know is I have got 0.75% profit that I can bang into my bank account, and I've done it. Yeah. Where's it pulling back to? $61.8 to the pip. But you see what I did there? I used that. I looked at that and I put it there. Why? Because I can give you a perfect example of how you should become a fib trader. And I'm going to sell you a course on it because I've just shown you exactly how fibs work. And aren't they amazing? Look at that 3-bar reversal we've got going off the 61.8 retracement on that leg. Or is it that leg? Or is it that leg? I don't know. I'll fine tune it to whichever one gives me the best chance of selling you a course. It's all a load of crap. All of it. So everything works sometimes with a 50-50 probability. Everything. Every market reverse alert has a 50-50 shot of getting a M pattern reversal using a retest. How often does it happen? Roughly half the time. Nothing's certain, is it? So if you're going to try and be certain and use a stop loss, you need something with a higher than 50% strike rate, which means you need a whacking great target. If you're going to be uncertain and just get in and hope that this is the one, and if it's not, look for another opportunity later, you don't need a stop loss. You don't need a target. You just need to get in and wait. Time is what you need. What's the market do? Move through time and go up and down. What's the easiest way to trade? Just get in and wait. Nothing mathematical or scientific or complicated about it, is there? When you look at it like that, obviously. How come you don't use mean reversion on indices? Because indices tend to trend harder and longer. So if you look at the S&P, T1 hit on the DAX. So upside DAX, you're looking at this weekly high, and then obviously we're breaking up to that, monthly high. So this is 2-month high, 2 month ago high. And then we're looking at that level there, which was just above that 2-month high. So watch this. Again, live example of support and resistance. Watch this level. You'll hear me say it all the time, won't you? Watch this level. I'm not saying short this level. I'm saying watch it. I have no idea what's going to happen. Something's going to happen there. That or that. No idea. Something will. It'll go up or down. I can guarantee it. What was I talking about? Yeah. So indices. Right now, in this year, we are in a bear volatile market, which is not normal. This is not the norm, what we're experiencing now this year. Or rather, I need to go into the daily chart. This is not the norm. This is the first time we've had this. Literally, this is the first time the S&P has done something like this ever. It's not normal. This is also not normal because we're coming out the back of this. We've no idea what now we should be doing. We know what we normally do. Yeah. So this is why I don't mean revert trends in S&P. Yeah. This is an entire year. If you missed that or that or that, you're dead. If you got in short there, you would have found it very hard to get out on that or that because of the speed and size of that movement. Yeah. So indices, stock indices are an accumulation of stocks. Stocks are designed to increase in price to please shareholders. If stocks decline in price, shareholders get fired, replaced with new shareholders who are told to increase price. So by default, if you are monitoring the top 500, in this case, stocks in the US, who are all told to increase their stock price, where do you think the stock index is going? So if you're going to mean revert a stock index, you can do it. And there's a strategy on the Market Reversal Alerts EA. There's a strategy for that on here. The S&P strategy. Yeah. So this is a mean reversion strategy, but it's long only. Yeah. So we only mean revert drops. Long only strategy. Yeah. So you can do it, but you do not want to short it. The reason I don't is because I've got 28 Forex pairs, which give me opportunities pretty much on a daily basis. So I don't need to take the additional risk of this. And occasionally it will go into a bear market, ignoring COVID. You will get bear markets, but bear markets are short-lived, 2 or 3 months normally. Yeah. And this is what we call bull market. This is what we call a bear market, as we know. Not teaching you to suck eggs. This is a catastrophic pandemic we've never experienced before. And this is what's called a bear volatile market. Normally they last for about 3 months. This has lasted a year. The recovery phase of this has been 6 months, and it's failed again. It may be recovering again. We don't know. So we're basically, since December 2021, we've been in a complete what the hell. Nobody knows what's going on, which is why interest rates for the last 18 months have gone through the roof, because we've got to control this, because that was ridiculous. We were locked down. Businesses were losing money hand over fist, and the stock prices were going up. Yeah, Nvidia losing money, losing money, losing money. Stock prices going up. Why? This is the payback for that crap, where everybody made a load of money when everybody was losing money. Peloton made money. Nvidia probably made money because everyone was at home buying graphics cards. We didn't have any, did we? We couldn't make them because there was lockdown. They didn't have gold, couldn't mine gold, couldn't make electronic components. It all went tits up, but Nvidia's stock went through the roof because it sold everything it had, which looked really good on paper until everyone went, can I have an Nvidia card, please? And they went, no, we haven't got any stock for 6 months. Oh, no sales. Collapse. But that's why I don't position trade indices, because they're too volatile. And they only go that way usually. But when they don't go that way, you're still going to get stuck, aren't you? It's just no point. You've got FX. It's an FX strategy. This is why the banks trade foreign exchange markets, because they're easy. They go up and down all the time because people are always transacting. Yeah. Microsoft are always buying a load of crap in US dollars from Japan. Therefore, you need to exchange yen into dollars. The pound and France and Europe are always conducting business. Therefore, the euro and the pound need to constantly change hands. As long as something is happening all the time in those markets, they go up and down. You need to make money in something. What do you need it to do? Go up and down. That's why the banks trade Forex, because it goes up and down all the time. When? No idea. It will, because it has to. So that's why FX is a much better instrument or vehicle for position trading than commodities. I've tried it on oil. It's very hard and very dangerous. Tried it on gold. It's very hard and very dangerous. Commodities, that sort of stuff, doesn't work very well. It does work until it doesn't. When it doesn't work in a nasty way. Again, there's a video on the website about it, why I don't trade gold. Go and look at the free trading, that one there. When you find stuff that doesn't work, remove it. And all of a sudden you're profitable. Yeah. Everyone's trying to make their strategy better. They're trying to make their strategy more profitable. If you just looked at where you lose money and remove that part of it, you just become profitable because you're only left with the good stuff. So remove the stuff that doesn't work. Much easier than trying to make something work better. I think the trend to pullback continuation would be viable until one has enough capital to risk a 0.25% entry, because there's less drawdown. You risk 1%, Evans, on a trade, you'll be dead within weeks. Unless you're using a stop loss, which is fine. If you're using a stop loss, no problem. If you go and try and position trade with 1% entry, you'll be dead. Very, very fast. There's people in the Telegram group, ask them what lot size to use. The people that have blown their accounts trying to position trade will tell you how they did it. That's how they did it. Too much. Franco, hope is not a good strategy. No, it's not. But it's all you've got. You've got hope, and you've got levels. So you hope when we get to a level, that's it. If it's not, though, you hope it's the next one. It will be one of them. That's why it works. We're pulling back into propulsion. So again, accumulation, propulsion, retest, push. That's what market structure is. So the buyers are in control. This is where they bought. This is where, if they are going to remain in control, they will add from. Where in that area they will add from, we don't know. But what you could do is guess by using a fib that it will be 38, 50, or 61.8. Possibly 71.9 if it's a very deep pullback, which would be the pre-market highs, which is what? Previous resistance we couldn't get through. So that's a very valid level. My stop loss is bang in the middle of it. So it's highly likely I will get stopped out in a pullback, but I want to protect my second position as I've made $500 this morning. So that's what I'm doing. I could move this down under there and risk a little bit more for a loss. And if it continues to bounce, I will make more money. However, what this could do is this could be a false breakout rejection, and we're going to come all the way back down and test that gap and then go into rotation for the day. Do you know what I mean? There's a lot of things that could happen moving forward. I have no clue which one it will be. That is either the right or the wrong thing to do today. Out. I don't know. That stop out that I've just had there could well be the exact point we bounce and go to 5R. If I'd have known that, I would have moved my stop down to there. You can't know that, can you? Because what can't you do? Predict the future. I can see where there's a good chance it will bounce from. Somewhere around that level there. But it may not. And if it doesn't, what am I going to do? Take a loss on the second position and jeopardize my profit? It sounds simple, doesn't it, when I talk about it like that? But that is literally all trading is looking at where we are, where we think we're going, and putting a plan in place for it. But where every strategy that you will learn fails is if that plan doesn't work out, it loses you money. With the strategies that I use, if that plan doesn't work out, I readjust the plan. But I don't take a loss. I readjust the plan. That's the difference. That's what the banks are doing. It's like, buy it up to 159.80. If it doesn't get there, wait for it to pull back and buy it again. If it drops down to there, make sure you just buy yesterday's low up. At some point, because the thing goes up and down, it's going to get you to a point where you're going to get out of that position. And as you're a bank, you've got an unlimited amount of capital and you've got a market maker desk next to you. You can say, oi, can you just push it up a bit for me? They can't lose, can they? We can. Stephen, I'm noticing all the brokers allowed to have US customers are leaving MT4 and 5. Not that I'm aware of. They're mostly switching to Trade Locker. No, I haven't noticed that. There's a couple of dropped MT4 mobile. You don't have to use MT4. Use a different platform. Use whatever you want. Charting's charting. Robo Forex. I mean, I don't know. I know nothing about that, so nobody's mentioned it to me anyway. But if it was going to be the Russian connection, surely they would have kicked them out a long time ago. All unregulated brokers are migrating away from MT4. Yes, that is probably happening, yes. So there you go. If they don't use MT4, MT5, run a mile. If they do use MT4, MT5, use them. MT4 is your guide for they are regulated and probably reputable because it's the largest software product in the world for trading and has the largest customer base and the largest brokerage base. So I would say probably if they don't use MT4, MT5, you want to rethink using them rather than the other way around. MT4 and MT5 charge a licensing fee to brokers to be able to use the platform, to give the platform away. So, you know, if you are a small unregulated broker or a broker that's struggling, yeah, you probably wouldn't be able to afford the license fees. So therefore, you want to be using them. They're going to do everything under their book they can to take your money away from you, increasing spreads, slipping you, overnight swaps, which are twice as big as they should be. Do you have a method to calculate position size for currencies? Well, I use the EA, which does it automatically for me. There's indicators that will do it. There's one in Telegram. I can never remember the name of it. Money Manager graphic tool. So if you use this, it's an indicator, Money Manager graphic tool. So if you stick that on your chart, okay, and hit the B or the S key, yeah, it will put that up, and basically you can adjust your stops and take profits, and you'll see it's automatically calculating the pip size for you based on the risk and reward, and you can adjust the risk and reward. Does all sorts of things, so you can increase the risk in dollars, and it will tell you need to be using a lot size of 0.35, etc., etc. So you can use that. That will automatically calculate, but it's based on your stop. So the market reversal alerts EA will automatically do lot calculation for you based on the percentage risk that you ask it to do. So with my setup, I use 0.25% risk on half an ADR of price movement. So I'm saying if I get into the market and it moves half an ADR against me, I want to be in 0.25% of drawdown on my account. Yeah. And you can obviously adjust that figure. You can adjust that figure. So the EA will do it all for you. So you say, I want to risk X% over this distance with my initial trade, and then you can use a lot multiplier if you want to increase as you go, or same lot size, whatever you want to do. But that calculator will do it manually for you. There are other calculators out there, obviously, but I mean, that's one I've used it myself in the past, manual trading. So that's why I have it in the Telegram group. But as a rule of thumb, as I say in the bootcamp, if you use 0.01 per 1,000 in your account, or 0.01 per 2,000 in your account, that's a good starting point for position trading. Ideally, you want to calculate it per pair, because the 0.01 over half an ADR is going to have a different financial value on the pound US dollar as it will on the US dollar CAD. Yeah, but all I'm saying in the bootcamp is keep your lot size as small as you possibly can, because if you come onto your chart and you go 0.02, for example, short, and that moves 3 ADR against you, you're not going to give a crap. Yeah. So the idea behind saying start with a 0.01 per 1,000 in your account is to get you used to position trading. I want you to see when I hit that button and it moves against me for 3 days, and then I hit the button again and add to the losing position and change my average price of that order, and it comes down over 3 days, and I've been in this for a week, I've taken 2 trades and it's come to a profit and I've managed to bank. That's what I'm looking for you to see. Holy crap, this is how you do it. Then you can focus on bigger account sizes, changing the lot size per currency, etc. But the EA will do all that for you, and that's why I built the EA, so that you can just basically chuck it on the charts and it will just position trade for you. Your job then, when the EA is doing all this, because all these trades are taken by the EA, not me, your job is literally every day to monitor that. And if you get something on there that gets a little bit too tasty, you deal with it using aggressive drawdown control. Other than that, you're just waiting, as I was this morning for the New Zealand dollar CAD, to get to a point where I can bank it. Yeah, so the EA, same, all these trades here, look. EA got me in. EA got me in on the H1 RSI extension, the 5-minute reversal alert. Price pushed against me by 3/4 of an ADR. EA took the second position. Price pushed against me by 3/4 of an ADR. We got a new reversal alert. EA took the position. I put the TP in place for those three in an area that was profitable, that I thought was going to be where we would bounce previous resistance, which it did, and accumulated for days and then flew through it. So that was 1, 2, 3, 4, 5, 6 days. I didn't even know I was going to get into it. I didn't look at it. The EA did everything for me. It calculated the lot size, did everything. Then it sat there, monitored it for 6, 7 days for me, waited for price to go up, and then it got out. Or I got out. Same here. H1, RSI extension. EA got me in short on the reversal alert. Price pushed up. EA got me in on the second reversal alert. Price pushed up. EA got me on the third reversal alert. I adjusted the take profits on this to above that high. Got out. So all I'm doing is adjusting targets to propulsion gaps. Personally, myself, rather than letting the EA do it, the EA will exit you automatically at those levels that you set. So you can say, get me out when I'm £50 in profit, or get me out when prices moved half an ADR in my direction as a total combination of the basket. Yeah. So when all three positions are 50 pips in profit, bank it for me. You can tell it to do all the automated exit for you. But personally, I prefer to use support resistance levels because they're easier and they're more likely to be achieved. Yeah. So this one, for example, here, this New Zealand dollar CAD, you've got that exit there. So that was 75 pips. That was 16 pips. So that's 91 pips. That was a loss of 31 pips. So the total is 60 pips in profit. So if the EA was told to get me out of the basket of trades when I get to 60 pips profit, it would have exited at that position. If the EA was told to get me out at 30 pips of profit, it would have got me out somewhere around about there. If it was told to get me out at 120 pips of profit, it would probably get me out somewhere down here. But because we know the propulsion targets get hit all the time, this is why we have the indicator, because all these grey ones are old targets where prices come and achieved all these targets. We know it's more likely we're coming down to there. That would have been the best place to take it off. But I had to make a decision today based on my exposure, which was a little bit too high on US and CAD. So I decided to get out of that one because I hadn't banked yesterday. There's a lot of processes that go through your brain when you're trading, not just I'm going to wait for this to get there. I need to bank some money today. So I have. I think it's still going down, but I need to bank today. I didn't bank yesterday. I got to bank some money. Yeah. There is no one size fits all, which is why the EA is, hideously overcomplicated, in my opinion, over engineered, but it gives you control of everything that you want to do with it. You can do absolutely everything with it. But as a base tool, its purpose is stick it on the chart, go and do something for a couple of days, come back, and it will have got you into every trade opportunity. You will never miss a position trade opportunity. And if you don't want to use the 75 like I am, you could use the 80 or the 70. That's fine. If you don't want to use the hourly charts, you want to use the 4-hourly charts, that's fine. If you want to use the 15-minute charts and trade on the 1-minute time frame, that's fine. Wouldn't recommend it, but you can. Do whatever you like with it. It's completely configurable. But as a base, its job is to automatically get you in with the right risk. Because that's the hardest thing to do. Apart from monitoring, and if you don't want to use the EA, this is what the dashboards are for, to alert you when there is an RSI extension, because that is our market condition indicator that tells us there's a mean reversion coming. You can do it all manually. Everything can be done manually. It's just, why? Why not just automate the whole thing to make your life easier? You could literally look at these charts once in the morning and go, nothing to bank, come back in the afternoon. I might stick that down there. That's it, you're done. You don't have to worry about anything else, because the EA, when you take that position off on the Euro CAD, so that Euro CAD there is that. If I take that off and bank it and put that down there, the drawdown goes up by that. And if this pushes up to there and gives another reverse alert, the EA will get me in again with exactly the same lot size as I had there before. And if it comes down again, I can bank it twice. But the purpose of the EA is it does all of this for you. You don't have to think about it. You just stick it on the chart, say, I want to trade H1, RSI extensions. I want to get in on the 5-minute reversal alert. And I want you to risk 0.1% over half an ADR's worth of movement. Go. That's it. It's trading for you. You are now a fully automated trader. That's the purpose of it. You don't have to think about all the other stuff. All your focus is now is, I am in X number of positions and I think it's going there because that's a big propulsion gap. Or I fancy going for that. Yeah. So all your job is literally is to move red lines around and put them below this big one, which is your average price. That's your entry at a level that is probably going to get hit like that. So that is a really easy target. It makes me money, and that's where we bought from last time. So let's see if we can get down there this time. If we can't and it pushes up, we add another position, we move the red line up, and then we retarget the next propulsion gap that makes us money. That simple. But if you're doing it manually, obviously what you've got to do is every 4 hours, you've got to come and look at the dash, look at the chart, and obviously you've got to look at this. You've got to go, right, okay, I've got to measure that distance. Okay, so if we go above that level, the next time we get a reversal alert, I will take a short. If you're off walking the dog when the reversal alert comes and then there's a news event that drives it down by half an ADR, you're going to miss that entry. The EA will never miss an entry. That's what automation's for. It's not to put on a chart and make you money so you can go and sit on a beach. It's to make your life easy so that all you've got to do is literally watch this thing. Just put that down there when it is ready. That's why I built the EA. But obviously that's not what everybody wants. Everybody wants something you can stick on a chart and go and sit on a beach, drink Mai Tais and buy a Lamborghini, because that's what Greg Secker does. Anyway. All unregulated brokers are migrating away from MT4, yeah. There we go. So that's me done for the day. Well, done for the morning anyway. So DAX, I'm out. Nice profit. There you go. See, we've pushed. That is a false breakout. So all your false breakout traders now are going short. Yeah. All your breakout traders are long and are going to get stopped out, depending on how they've positioned their stops, either down there or down there. Yeah. All the mean reversion traders are probably not trading that, to be honest, because it was a strong breakout. But market structure traders now are looking for a very deep 71.9 retracement. Long entry, which could well happen or not, because we've got a gap fill to do. No idea where it's going, but this is the whole point of the stock index hedge and the opening range breakout strategy. Don't care, I'm done. We're done for the day, aren't we? We haven't got to worry about it. Right, I'll leave it there. I'll be back this afternoon at 2:20 and tomorrow morning at 7:50 as usual. Everything's just kind of pushing back a little bit on the moves we've had so far this morning at the minute. Be aware of, obviously, news today. So the we've had Lagarde speaking. Did she say anything? Nothing. Says nothing from Lagarde. Sorry, from the stability review, rather, not Lagarde. So there's nothing from that. We've got the autumn forecast or the autumn statement. I think it's about 12 o'clock today for the pound. So there's potential volatility around the pound this afternoon if Jeremy Hunt comes out and says anything exciting. Probably not. So just be aware of that. And then 1:30 this afternoon is the main news, which is your unemployment claims for the US. So we'll get some volatility off of that. We'll have a look at the US indices and see what impact that's had on those at 2:20 this afternoon before the New York Open. And then obviously we've got that this afternoon to worry about as well. So there is news coming up, but it's not until 1:30. So I don't think we'll get much out of the pound, but just watch. So anything that's if you've got anything US dollar related that is in profit, might want to bank it ahead of the news events and just stick it in the bank in case it goes into drawdown. Same with the pound, but I've only got one exposure on the pound at the moment. So, all right. Anything else you need, let me know. I'll be back this afternoon, 2:20, tomorrow morning, 7:50, same time, and we'll obviously have a look at the US indices, see if we can milk some more money out of those. All right. Have a good one, and I'll be in Telegram if you need me.